First up, Apple. In its fiscal Q4 2025, Apple reported revenue of about $102.5 billion, up roughly 8% year over year. The services business is at an all-time high. iPhone sales remain strong, and the company is continuing large share buybacks. Apple is also investing in AI, software, and supply chain improvements. If you believe Apple continues to execute, it remains a core tech powerhouse. Apple trades at a trailing PE around 30.3. It has performed modestly compared to peers, which some analysts see as a chance to capture upside if earnings continue to grow over the next 12 to 24 months. Assumptions: Apple maintains execution, supply chain stays smooth, and demand holds. Risk: tariffs, competition, or any production issues could affect results. Next, Microsoft. Latest Q4 2025 revenue came in around $76.4 billion, up roughly 18% year over year. Azure and the intelligent cloud segment continue strong growth, and AI infrastructure is a major driver. Microsoft's business is diversified across software, cloud, and enterprise solutions, making it a core tech player in Q4 2025. Forward PE is around 36.7, reflecting expected growth. Buying now can position you ahead of the next leg of growth if cloud and AI adoption continues. Assumption: Microsoft keeps its momentum and executes well. Risk: regulatory challenges, competition, or slower than expected growth. Third, Johnson & Johnson. Q2 2025 sales were roughly $23.7 billion, up 5.8% year over year. Adjusted earnings per share was $2.77, and the company raised its full-year guidance. J&J operates in pharmaceuticals, medical devices, and consumer health, a business known for resilience and steady earnings growth. Valuation is modest, PE in the high teens. The market may start rewarding resilient, steady growth. Assumptions: continued pipeline success and stable healthcare demand. Risk: regulation, patent expirations, litigation, and global health policy changes. Fourth, Alibaba. Analysts suggest potential upside based on fundamentals and intrinsic value. Core business: e-commerce, cloud, and digital payments. Assumption: regulatory pressures stabilize and the business continues executing its strategy. Risk: Chinese economic growth, geopolitical factors, and trade tensions. Forward PE is in the mid-20s, reflecting discounted expectations due to perceived risks. If fundamentals hold and growth resumes, there is potential upside. Risk remains higher compared to peers. Regulatory, economic, and geopolitical challenges could affect performance. Finally, Chevron. The energy sector continues to have strong cash flow, and Chevron's operations remain robust. Global demand for oil and gas continues, and the company generates healthy dividends. Assumption: operations and demand remain resilient in Q4 2025. Valuation metrics indicate the business is performing well relative to cash flow and dividends. Positioning now may capture upside if global energy demand remains strong. Risks: commodity price swings, regulatory changes, and supply chain disruptions. Before taking action, remember, macro risks, interest rates, supply chain shocks, and global economic trends can impact any stock. Company-specific risks: earnings misses, competition, regulation. Strategy: diversify across sectors, track your thesis, and plan for a 12 to 24-month horizon. Acting now is about positioning ahead, but always do your own research. This is not financial advice.